Well, good morning, everybody, and welcome to, this is Friday. Where are we here now? Friday. Let me just get this going here. Our video. There we go. Hello, everybody. How are you? Andrew Horowitz here from TriggerCharts. Welcome to the Friday, December 13th pre-market rundown for what's happening with markets, and a lot of things are happening. So hopefully everybody can hear me just fine. I'll make sure that everything is working here. Let me just make sure that all of my little gadgets and music and all that stuff is turned off. So, a couple things I want to mention to you, that there is some kind of issues going on right now with the trading app store at TradeStation. If anybody's having any trouble with that, please do me a favor and send us an email at support@triggercharts.com. Not exactly sure what the resolution is going to be, what the problem is. I know they're working on it. I've talked with them several times, and it looks like that they are making some adjustments and upgrades to the system, and some things went a little bit sideways through the month of November, but I believe they are fixing that right now. So with that in mind, do us a favor, send us an email at support@triggercharts.com if you're having any trouble. By the way, just to mention that, if you do have any desire to check out any of the indicators that we have and that we're going to be talking about today, you can go over to the trading app store. I put the link right down there in the chat. You can check that out and just click on that, and then you can get a 10-day free trial of any of the products. Like I said, any problems you're having, let us know. So let's get a little bit into what's happening right now. We see that the futures are up again this morning. We're seeing a bit of a trend into November. Started December out very, very soft. Now we're getting towards the mid part of December, and everybody seems to be racing towards the end of the year. We talk about the horse is seeing the barn. And what we're finding is that there seems to be one piece of good news and resolution to something on a regular basis. The latest that we saw yesterday was that miraculously, we have a trade deal. It's kind of like the Monty Hall of markets. We have a trade deal. Let's make a deal. Even if that deal is nothing like what we promised, let's at least tell the markets that we have a deal. And we go back and forth with what China says, what the U.S. says, what's in the deal, what's not in the deal. It's kind of, well, frustrating. If you're trading because you think that this is going to be impacted by some of the news that is related to any of these discussions by governments, let me give you a little word of advice. Be careful. The fact is that when we look at what governments do on a regular basis, they can't, I'm not trying to be a conspiracy theorist, but when it comes to money and when it comes to re-elections, when it comes to any of this, a lot of it is all about distractions and how they want to shape what you're thinking. There's no coincidence that the meeting today by China, the announcement by the Chinese Ministry of Commerce, is coming exactly at 9:30 this morning, right when markets open. There's no coincidence that yesterday, at 9:32 in the morning, there was an announcement that we have a trade deal in principle, and that scooted the markets higher as well. So all of this is a giant orchestration to get you involved and feeling good and confident. Remember, the markets are all about confidence. Before we go any further, I want to mention that this is not a recommendation to buy or sell any security. There's a disclaimer that is right on your screen in front of you. Please consider this entire discussion for educational purposes only. For educational purposes only. Of course, this will also be recorded. We'll have this on our YouTube channel, and we'll also have this on TriggerCharts.com later in the day today, where you can check that out. Everybody saw the disclosures. We'll close those up and move along. So yeah, we have this Monty Hall market. Let's make a deal. How many of you remember that show? So we also have Brexit Secured, it seems. We have the vote that put Boris Johnson's party in the lead by a significant margin. And we see on the right side of the screen right here, and I'll spotlight this. We can see on the right side of our screen right now that the pound, the British pound, really jumped up. It was up about 2.5% on the news, came back about halfway on this. And we're seeing that there is some excitement over the fact that they'll finally hopefully get something done when it comes to Brexit. It's only been 2 or 3 years by now, right, that it can't get anything done. Boris Johnson promises, I think it's January 31st, Brexit. One way or the other, they're going to get this done. So the pound is jumping because obviously when we extract that from the EU, and the euro is dropping as compared, the pair is dropping as compared to the British pound right now. What we're finding is that there is some thought that the British or the UK would be a lot stronger without being in the EU. What else do we have going on? Well, what's really driving markets are some market forces, some market mechanics. Towards the end of the year, we have a good amount of buying that will go on, as well as some selling, but buying that's really going on towards the end of the year to shape portfolios, kind of painting the tape at the end of the month, at the end of the quarter, at the end of the year, at the end of the decade. This is all going on right now, and we see it right before our eyes, where we have the continuation of a trend higher throughout the entire year, and you can see that on any of the charts that we're going to look at shortly. In addition to that, we have a lot of headlines. We have headlines about the Fed standing pat. They're going to hold the rate for some time. They even talked about possibly holding the rate to 2020, which I don't even understand. How is the Fed going to hold their rate into 2020? They don't know what's happening 1 month to the next. If you look at the Fed, they're no better, maybe even worse than some economists in general. So how do they know what's going to happen next month with the tariffs, next week with the Brexit, next year with what's happening with retail sales, which we saw this morning, which fell short? It's really pretty amazing that we have a Fed that is so confident with their abilities, but so wrong all the time on their outlook and their projections. It's astonishing. Yet the markets will continue to listen to that because they believe the Fed, at the end of the day, will have their back, whether it be through interest rates cut or the $300 billion they recently put in, or, as noted yesterday, the additional $300 billion that will probably be put into the markets on a regular basis through the end of this year to make sure that the repo markets are satisfied and liquid for all the year-end things that have to happen with related to overnight lending, tax payments, some kind of treasury bill, renewals, sales and buys. They want to make sure that that market is liquid and we don't have a situation like we had in September where we had a lockup of the repo market. So the Fed is going to be putting in close to probably $500 to $600 billion in total from September through the end of December. Now, if you just quickly calculate that, that's close to about $175 billion per month, maybe even close to $200 billion per month. You wonder why the markets are moving up in a straight line and why you see that there really is no concern when it comes to big drops. Look what's happening right now. We're seeing the markets move around dramatically once again. We had about a 200-point lead on the Dow Jones futures overnight. Now they're starting to come back. Who knows what's going on in terms of news items or I just reading some of the chat. Sorry about that. What's going on with the markets right now and what announcements are made and who's saying that, the trade deal is really BS. There's nothing happening more than what I think, soybean purchases, and we're willing to drop down our let me bring this back. Drop down our tariffs that we're going to be going into place in December. But basically, the jobs numbers, which are really good, that's been solid. We saw that last week, a major blowout with the jobs numbers, really close to historic lows in terms of where we are related to the jobs number, 3.5% unemployment rate. So there's some hope when it comes to that, and that's good. There's a new narrative that we're seeing right now, and I think it's really important to recognize. And again, a lot of this is non-chart related. We'll get to the charts in a second. Looks like our futures are really starting to drop pretty precipitously here. When we started this morning, we were up 100, and we're only 8 minutes into this and kind of moving around from up 100 to flat to now moving around to 57 up. This is live and ticking. So something's going on in the background. Gold is picking up pace as well. And I would venture to say it's some of the discussion of what China's going to have to say during their meeting. So the new narrative. The new narrative, which you're going to hear, and this is going to be part of this because we're past the idea of, okay, the Feds are doing what they can. They're going to continue to have your back and lower rates. You're going to get past the whole idea of the jobs numbers. You're going to have all of this economic numbers that are coming out that are still pretty soft around the world. And what you're going to see is the new narrative start popping up, which is the bottoming process. It looks like there is a bottoming process going on. And what that does is it brings in the idea that even if there are some bad numbers that are presented, we're in a bottoming process, meaning that it's going to get better from here. It may be a little sluggish for the next month or two, but don't worry. It's a bottoming process. Keep your eyes peeled and ears peeled for that. You'll see what's going on. You'll see that occurring more and more, particularly when it comes to China, emerging markets, and Europe. Economic indicators clearly weakening. We saw the retail sales numbers here weaken. GDP looks like it's going to come in about maybe 1.8 to 2.0% over the next quarter. CPI and PPI is still not showing any kind of significant gains. It's amazing that the Fed is so confident that they could raise interest rates to the 2% threshold that they are looking for, when in fact, there is no particular evidence that anything that they've done in the last 25 years can actually push inflation towards that 2%, but let them think what they want. Moving markets this week, like I said, trade headlines are really all the rage right now. That's what's going to be moving things. Central bank rate decisions continue to be weakening throughout the entire globe. Next week, we have housing starts. We have building permits, leading indicators. We have personal income, and we have personal spending. Now, you have to make sure that if you want to be updated, that you get on our mailing list. You can go over to TriggerCharts.com and sign up for that. Sign up for the registration for the webinars. As you do, we're seeing that the futures now turning towards the red. The Dow Jones and futures just hanging on to a +6. It looks like they're going to probably go negative any second and follow along with what's happening with the SPUs and the Qs. There we go, back down to negative, trying to just hold on so tightly. We're going to be looking at the Qs. We're going to look at ROKU, nice drop through a zone yesterday. Peloton, which you got to feel bad for Peloton. Feel good for the holders of that, but they really got blindsided by that whole commercial. Look at Facebook, saw a big drop yesterday due to issues related to antitrust and possible integration of all their different messaging systems where there's some concern from governments about that. We got to look at the SMH, the semiconductors, and of course the pound. I'm going to write the word here. Put your symbols that you want us to take a look at there, and we can go from there. Let's take a look at what's happening here. All right, so let's look at the SPY. We talked about, actually, let's look at, is Facebook. Let's take a look at, start looking at SPY. So I want to focus in on a few things. Actually, you know what we're going to do today? I think we're going to go right to the currencies. We don't talk about currencies too often, and I thought we'd talk about that. So let's kind of, get into the currency discussion of what's happening here. There's a pound. There's a cross between the pound and the U.S. dollar. And you'll see that on a daily basis, we saw that there's been a pretty good bottoming area about 120, about the 120 mark or so, right above the 120 mark. And from there was some move down. There's some excitement that we'll get something done here. Over time, we've been in a pretty big consolidation. I would say this is a downtrend that broke. This is really where we are right now. Looks like we're no better at this point. 133.33, 135, 133. 33. So let's draw a line and see where we are, because I think this is really important to take a look at where we are right now. I can find my line tool. There we go. So I think we're about 133 right here. You can see there's a lot of overhead resistance here. We see that several different times. We saw that there was actually, in fact, a good amount of resistance at these levels, give or take in the zone. You can see there was some consolidation. And then we have this big drop with just uncertainty going on from July through now. We also saw that the pound really wasn't doing well due to the fact that, their economy's not doing well in the UK, plus the uncertainty. And then with the elections happening, the idea that Brexit's going to happen, we saw this pop. Right now, again, we're right at 133 and kind of dripping down a little bit into 133.29. What we're seeing right now is this consolidation and inability for the pound to break out. What I will share with you, and what I think is going on right now, is really that there's a lot of short positioning ahead of the election. And when you have this short positioning ahead of an election and it turns to the other side, doesn't go with the short side, obviously you get a significant move to the other side. So what happened is you have the short position on the pound versus the dollar. The known entity or the unknown entity of the election happens. Finally, what happens is we get a resolution, and therefore the other side that is betting on one way has to clean up their act. They have to clean up their positioning. And what happens here is they moved it right up. So there you go. I think nothing more really to talk about with this, because I think it's going to be very volatile. You see it coming down again, and I think really I don't think there's really any impetus right now, because we still don't know by January 30th or January 31st what is going to be the final resolution here and how this is going to really work out in terms of, is it going to be an agreeable pact, or is it going to be something much different? So I would be careful to get too heavy in this particular trade right here. Seems to be that there is going to be a bit of a gap down. You want to look on our 30-minute chart, or 60-minute chart, sorry. Look at that. You see the gap down can come back to consolidation zone about 132.17. Not a long way from here from the perspective of actual price and raw price. But what you do have is, from a currency standpoint, which is a very leveraged trade, a very significant move down to close that gap where we were yesterday. You see it already, from 135 down to 133. A big move. Let's look at the cross on euro and the pound. Now, this is pretty interesting to look at. Similar, but upside down. Right now, we have the euro as the one that is losing value to the pound, which makes sense with what's going on with the election. But you can see on the daily chart very clearly that obviously this has been in a downtrend. This is the aileron indicator. It's been in a downtrend for some time. And with that in mind, what we're seeing is that, since I would say about October 15th, right? The 14th, we've seen a short call, a few different short calls. The red is symbolizing on the autopilot that this is a short entry confirmation after a yellow bar. And what happens here is that we saw this consolidation get really tight and then drop again. But again, if we look at a bit of a shorter term chart, let's look at this and hone in here. After the election, right here, this was the election news right there. We saw that, everybody covering their positions, moving out of that area, and then some, better minds and cooler hands started to come in, and we're seeing this turn around a little bit and move higher. Now, where do you have on this? Where is the number? Well, if we look at this and we just say this consolidation zone, probably about the 84.84 on this cross, the Euro GBP cross, is something to really look at. There is a lot of resistance at that level. Look how long this consolidation goes. When you start seeing consolidations like this, what we always like to do is take our boxes, kind of draw these out. And you can see there's a tremendous consolidation in this range right here, which would mean that, trying to get above there would be very difficult. If it did, in fact, get above that level, I probably think that you would see a very significant amount of movement to the upside from there. But still, you look backwards and even go further back. And of course, we always train people on this, and we talk to you about this. You always look from right to left. Look left. As a matter of fact, when I talk to people on the phone, when I give them some training, I always say, listen, look left. Repeat back to me. Look left. And we do it like 10 times to get it really ingrained. So right now, kind of on your own, think about that. Say it to yourself. Say look left. Look left. Look left. Always look left on a chart, which makes sense. We want to look at the historical levels. We want to find out where there are areas that we can identify that will be connected together over time to provide us for important and key resistance and support zones. Remember, when you're below a level of support, it becomes resistance. So right now, this was a level of support. Let's kind of zoom in here. And I'll mark this up a little bit for you. Let's look at, this was right here, was support for a long time. Couldn't break below it, kind of popped back up. That level of support now turns into, that level of support, because it was support, now turns into resistance in this range. So when you look at this, you have to understand that resistance can become support, support can become resistance. The whole point here is we're looking at a very important level and very important breakout here that hopefully will resolve itself. But right now, I do believe that all the crosses that deal with the pound right now are really dealing with a off-sided nature of covering on the short side or on the long side, depending on what the cross is. And that's causing some consternation in the area of currencies. Does that make sense to everybody? All right, let's kind of look up here. Oop, let's get out of that. Let's clear our drawings. And let's take a look now at I want to look at the ES because I want to see what's going on here. So here's the 30-minute on the ES. We saw right now a pretty good viewpoint right here. The breakout last night after the close and the move up higher due to this trade deal, which I believe Kevin's listening. Kevin, is there any news on the trade deal you can pop through to us? Because there is something happening at 9:30 this morning. The Chinese side is going to come out with their commentary. And the way that the market looks, something is a little squirrely with this trade deal. But what we see right now is a pretty wide area. Again, taking our box tool, only a few simple tools you could do. When we're looking left, we can find this wide range. And wouldn't you know it, once we got past this level, see this level right here, going across this level, there was an opportunity for a fast zone because when we looked left, there was nothing in this range really here that we're drawing in terms of our charts. And once that broke, it broke really hard. So right now you saw there was a long call. We got you out probably right at an even Steven kind of trade. And then the break. Right now we're still in a consolidation. We're holding. What's really interesting is I want to focus on this because I think this is really I think this is fascinating, actually. Let's get rid of this box here. Let's really zoom in here. Wow, look at that. What am I talking about? Well, I'm talking about that how we have these lines drawn of a high volume node on the ES, and it's respecting it dramatically. Don't forget, this is also being used by a lot of the institutional algos, this kind of market profile. And if we do see a break, probably have down to about 3163 level, which is these markings. What happens past that? Well, past that, can I get back my, can't get this back. Get going. Let's go to the mouse. There we go. Let's clear our drawings. Well, we have a range right to there. Now, what else do we see on this chart? We see there's another zone. A breakdown below 3163 takes us right about to 3152, about 11 points. Again, we have these ranges because when we see nothing but air, a hole, we consider that a fast zone, an area that price can move vertically through time very quickly. We see that oftentimes we have prices that will move, for example, let's change up our color here. Oh, we're going to use a fun color this morning. Let's take another box. Let's take a look here. This area here. It's a consolidation. We're seeing a consolidation through time horizontally. Price moves slowly through time. And then vertically moves quickly through time. We have these areas that we're going to draw here, approximate where we are. I'll kind of draw this out to make sure. Yep, that's right, we are. These are all fast zones. So these are areas that you really have to pay attention to when, in fact, we are looking at these fast zones, and that's what you want to trade. Who wants to trade a consolidation, a slow move through time that can go up, can go down? We want to hit those on a fast zone. We want to hit those levels that are really important. Excuse me. Let me get a quick drink here. A little parched this morning. All right. Markets are really starting to come down again. Seems that President Trump tweets that the Wall Street Journal story yesterday on the China deal is completely wrong, especially on tariffs. I got to figure out which story they ran, because they ran a lot of stories. The idea that they can roll back tariffs. So I guess what's happening right now is that there was some story that was pushed out there. This is my guess from what I've seen in all this. There was a story out there that said that they were signing a deal, they're going to roll back tariffs, and all this is going to happen. China this morning said, hey, you know what, there's something wrong, they're coming out. President Trump wants to get ahead of the China news. It's going to be at 9:30. So he puts this out saying that the Wall Street Journal was incorrect in their reporting. Just my guess. We'll see how that works out. All right, what else do we got here? We have SMH. Oh, no one. SMH. Breaking out to all-time highs here are the semiconductor index against all odds. There's some concern for a long time that the tariffs are really going to hit these companies hard. You see that they really broke down substantially. And we're talking about, from 81 to 77. I mean, we're talking about a 70.65 point move, like an 85% move on the upside for this throughout this year. Breaking out to all-time highs yesterday on the news that the trade deal was done, which we will see what's happening. Yeah. So they're backtracking on this whole thing already. So, which is probably what we all expected to be the case. It seemed like there was something wrong about this. So we don't know the plan. Bottom line is, thanks, Kevin, for giving us that information. But the SMH did break out to all-time highs yesterday against all odds. You're looking at companies like AMD in this, again, breaking out. Look at this big move yesterday, down a bit today. But I mean, look at this move. We're talking about a vertical move on AMD. What's really nice about this is we got confirmation from the aileron as well. The aileron showed us that we were in a really nice uptrend starting back in, we're looking at October of 2019, and the follow through off the bounce, that kind of banger move where we couldn't get below and it banged up, and we got that additional move on the upside, and it really hasn't come down. We saw a little bit of a breakdown right here, but then it kind of moved back up. I would expect this to come back down, probably test the levels close to about 35. I do, even though the trend right now is high, it does look like it's a little bit exhausted overall. Facebook Facebook is down a little bit today, down about 85 cents. Big move down yesterday after there was some news breaking about the potential for an antitrust and possibly some other DOJ concerns about the integration of their various messaging services. So this is down to 196. I mean, Facebook, if you see, once again, if you're kind of worried about Facebook, landed right on its support yesterday. Still looking at a short call if this does confirm out today, which it will, being down 66, so it's below this level, trading about 196 even. So yeah, you're going to be below here. You have some support at the 196, but really support comes in about 191 and change, 192. And you are seeing a little bit of a turn of the aileron. So the trend was really nice on the upside overall. And then we got that trend change right there. Okay, let's look at this. MRKR. What is this one? Marker Therapeutics. Looks pretty abysmal, this stock chart. Clearly in a downturn. This is for Nick. It's right now in a consolidation zone. Again, do you want to trade the consolidation? Aileron confirmed a downtrend since October, which clearly went from about $7 down to about $3. This is a speculative trade. I'm sure it's trading. There's probably not a lot of good volume on this. I will share with you that if you desire to trade this and you feel compelled for whatever reason that you need to trade this particular stock as opposed to all the other stocks that are out there that could really be a benefit, particularly not in a downtrend if you're on the long side, I would say that, you know, over 340 looks like you have the chance for 385. Then you got a lot more congestion once again. You got a lot of work to do. You can see if we look from right to left, all these various lines that are drawn in here above the 390 level. So when you take a look at this and you kind of draw the range and you kind of take a look at this right here, I mean, we're seeing there's a lot of congestion in this area, a lot of concern. You have a bit of a hole, so that's good. I think that when we look at this and we see that there is this kind of hole to 390 or so, but that's pretty good. Obviously, that would be a nice little move. A 60-cent move on a $3 stock, I'll take it. But, where do you go from there? Then you kind of back into a hole again and back down to support about 350. I'm not thrilled with that. What other stocks do we have here? We have asked about ROKU. Put that in there. ROKU, again, down about 124 at the 138 range. Seems to have some support and hold for whatever reason about this 137 level. We can go back to this area to simply draw a line. And this is the nice thing. There are some other kinds of indicators out there that give you ways to guess. There's no guessing here. Just draw a line. There's your support. You break down below that, there really is nothing in this area at all. When I look at this and I really start focusing in on the area, we can go down to probably 120 pretty easily. Not a lot of support below those areas. And when I look from right to left, the only thing I'm finding is something right about in here maybe, which is right at about the 129 level, but not enough to really make me concerned. We also have a confirmation by Aileron that's showing that there is a downtrend as well. Started pretty heated downtrend. Not so much yet to give us an exhaustion point. We saw a couple exhaustion points yesterday on the 30-minute, and it did resolve a little bit better. But right now, we're not seeing an exhaustion point right there. I'll mention again that just save that because it seems you can't get to the trading app store right now. If you have any trouble or any issues, stick with us. Everything will be fine. We'll work it all out. Send an email to support@triggercharts.com. Do me a favor also, send the link to register for this webinar, which you got. Go over to triggercharts.com. On the top, it says, hey, register for the webinar. Send this to some of your trading buddies. Let them see what's going on as well. We're going to end it there. I want to thank everybody for joining us. Make sure everything is good here. I did. Our board, we're not going to get blown out with the signal about when the markets open. It's going to be a pretty wild day coming into the end of the year. The obvious news that will be coming out. So stay tuned for that and let's see what happens. And I will talk to you again next week. Thanks for joining us.